Hi, thank you for joining us here at Tax Talk UK, where we talk about all things tax and other aspects of running your small business and being self-employed. So we've been asked how you will know if you need to make a payment on account by the end of July. And before we move on to that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to access other information we have on a whole wide range of topics aimed at supporting you running your small business. So on to payments on account then. So of course you can log into your personal tax account on the government gateway at any time, and that will show you actually what payments you are due to make. So you can check there categorically to tell if HMRC are expecting a payment on account from you. But why might you need to make a payment on account, and what instances may it differ from what your statement says? So if you remember from our previous videos, we talked about the payment on account system and how your payments on account for the current tax year are based on an estimate, which is based on what your tax liability was for the previous tax year. So now we have just started a few months ago into the 22-23 tax year. So at the moment you will be completing your 21-22 tax returns, and the last tax return that is actually past the due date now would be the 2021 tax year. So therefore your payments on account for the 21-22 tax year are based on your 2021 actual liability, and those payments on account for the 21-22 tax year will be due 31st January and 31st of July 2022. Unless you've submitted your tax return for the 21-22 tax year, which we'll cover shortly. So basically, if you had a tax liability over £1,000 for the 2021 tax year, then it's likely that you will be due to make payments on account for the 21-22 tax year, which will be half of that in January, which has already gone, so you'd already have made that, and another half due this January, unless when you submitted your 2021 tax year, you anticipated your tax liability for the 21-22 year being lower, and you actually applied to reduce your payments on account. And so then the other scenario, which can be a little confusing, is if you were due to make a payment on account for the 21-22 tax year at the end of July, but in the meantime, since the end of that tax year, you have submitted your tax return and your tax liability is actually lower than the previous year, which therefore your payment on account, if you'd have made it as was expected, would reduce in an overpayment, then you can, in this instance, just pay the remaining tax liability for the 21-22 tax year. So let's say, for example, that your liability for the 2021 tax year was £1,000, and therefore you were expected to make a payment on account by the end of January for £500, half of the 1,000, and another payment on account at the end of July for another 500. But you actually, since the end of the tax year, you've actually submitted your 21-22 tax return, and your actual liability is only £750. Now, of course, if you pay another 500, you've already paid 500 at the end of January 22 or by that time, because of course you might have paid it earlier. So if you make another 500 payment on account at the end of July, but you have submitted your tax return, then it clearly that you'll have then paid £1,000 and your liability is only £750. So therefore, in this instance, as you have submitted your tax return, and therefore HMRC will see that your actual liability is less than anticipated. In that scenario, you could just make the payment of £250. Now, if you don't submit that tax return until after the end of July, then you should still make the payment on account that's anticipated. But of course, remember that if that payment on account, once your tax return goes in, results in an overpayment, you will be able to have that refunded back to you. And so again, it can cause confusion in that scenario if you receive a statement after you've submitted your tax return, but before the payment on account is due. The statements are generated in advance, and there is quite a lead time between the point that that statement is generated and the point that that statement actually makes it into the post and lands on your doorstep, or your doormat, should I say. So therefore, just because your statement still says the higher amount, if you submitted the lower payment, then that would just be the tax return showing the lower liability, then that would just be an overlap. But as I mentioned before, you can log into your personal tax account on gov.uk at any time, and you can actually see exactly what payment HMRC are expecting from you. And remember, if you are late, you will be penalised if you don't make an arrangement, a plan to make the payments with HMRC. And in either case, you will be charged interest for any late payments. So of course, if this is something that you're having difficulty with and you need some help, then we would advise that you engage some professional help to help you with this. And of course, if you are engaging professional help, then please do make sure that the person who you're engaging is qualified to do what you're engaging them to help you with, and that they're a member of a professional body if it's applicable for that profession, and that they have professional indemnity insurance. So I hope this has helped, and this helps explain a little bit about whether how you can check whether you need to make a payment on account, but the scenario that would lead to you needing to make a payment on account, and the scenario that may lead to you not needing to make the payment on account that was originally anticipated. So as I mentioned earlier, if you could please take a moment to subscribe to our YouTube channel, so you can refer back to this information if you need to. And thank you very much for watching. Goodbye.